Welcome to Market Brief After Hours. We have a lot of ground to cover today, from a massive surge in the Dow to a dramatic rotation out of technology stocks, falling oil prices, and some historic milestones in corporate America. It was quite a day of divergence on Wall Street. How would you characterize what we saw today?
It was really a classic story of market rotation. For weeks, we've been seeing a massive momentum unwind, where investors are taking profits from those high-flying semiconductor and technology names and moving that capital into what we call old economy sectors, things like financials, healthcare, and consumer staples. Today, that trend was on full display, supercharged by some strong earnings reports and a sharp drop in oil prices.
Let's get right into the numbers. How did the major U.S. indices wrap up the session?
The Dow Jones Industrial Average had a stellar day, rallying 537 points, or 1.03%, to close at 52,747. That marks its third straight winning session. The S&P 500 also managed to end in positive territory, adding 0.21% to finish at 7,429. But the tech-heavy Nasdaq Composite went the other way, edging down 0.22% to close at 24,877.
That Nasdaq decline really highlights the pain in the chip sector. Just how bad was the sell-off there?
It was a tough day for semiconductors. The VanEck Semiconductor ETF fell more than 3%, marking its fourth consecutive day of losses. We saw major players like Micron and AMD both tumbling more than 8%. Shares of Sandisk also took a massive hit, closing down over 14% to lead the losers in both the S&P 500 and the Nasdaq 100. In fact, Sandisk is now down a whopping 50% from its June highs. This correction in chips is a major technical shift, even if the underlying fundamentals haven't fundamentally changed.
Meanwhile, the Dow was lifted by some stellar earnings. Who were the big standouts there?
Sherwin-Williams was a massive driver, surging over 8% after reporting second-quarter adjusted earnings per share of $3.70, which beat the consensus of $3.51. They also raised their full-year earnings outlook. Then you had beverage giant Coca-Cola, which popped 5% on a top and bottom line beat, along with a hike to its full-year guidance. We also saw the broader financials and healthcare ETFs surge to record highs, led by strong gains in insurance stocks.
You mentioned falling oil prices giving the market some support today. What's happening in the energy markets?
We saw a significant drop. West Texas Intermediate crude futures fell about 4% to settle at $79.26 per barrel, while international Brent crude shed 4.8% to end at $84.09. This slide was driven by diplomatic developments as Iran held discussions with Saudi Arabia and Oman regarding the Strait of Hormuz. There's hope that these talks might ease tensions and keep the strait fully open, though analysts at Goldman Sachs did caution that ongoing Red Sea disruptions and potential attacks on infrastructure still pose upside risks.
And of course, all of this is happening right before a crucial Federal Reserve rate decision. What are investors expecting?
The consensus is that the Fed will keep interest rates on hold on Wednesday at 3.75%. However, the market is looking for absolute clarity on what comes next. Right now, futures markets are pricing in about a 56% chance of a quarter-point rate hike in September. Whether this rotation into cyclical and rate-sensitive sectors continues will heavily depend on interest rates and oil prices staying relatively stable.
Let's look internationally now. Europe seemed to catch a positive wave today, but Asia had a much rougher ride. What was the story there?
Europe was definitely a bright spot. The Pan-European Stoxx 600 climbed 0.4%, led by consumer stocks after strong earnings from Unilever. The UK's FTSE 100 jumped 0.88%, Germany's DAX gained 0.51%, and France's CAC 40 moved up 0.63%. We also saw European government bond yields fall, with the German 10-year bond yield hitting a two-week low of 3.104%. On the economic front, saw its registered unemployment rise by 5,900 in June, which is actually a slower increase than we saw in May, while French consumer confidence improved more than expected to 86 in July. Spain's labor market showed even stronger signs, with the unemployment rate dropping to 9.87% in the second quarter, its lowest level since early 2008. But Asia was a completely different story. It sounds like there was some real drama, particularly in South Korea.
Absolutely.
Asia bore the brunt of the global anxiety ahead of the Fed meeting and the upcoming mega-cap tech earnings. South Korea's KOSPI 100 plunged a massive 11.63% to close at 7,389. The sell-off was so severe that the Korea exchange actually halted trading for 20 minutes after the broader index fell 8%. Japan's Nikkei 225 wasn't spared either, tumbling 3.95%, with semiconductor-linked names like Kioxia Holdings plunging over 18%. Both of these markets have been incredibly strong this year, precisely because of their heavy exposure to AI infrastructure and chips, so when the tech rotation hits, they feel it first and hardest.
We're going to take a very quick break to hear from our sponsor. But when we return, we'll dive into the latest U.S. economic data, look at some key currency moves, and talk about a historic milestone for Apple. Stay with us. Welcome back to Market Brief After Hours. Let's shift our focus to some of the key U.S. economic data that dropped today. We had updates on trade, consumer confidence, and housing. What are these indicators telling us about the health of the U.S. economy?
It's a bit of a mixed bag. First, the U.S. goods trade deficit narrowed in June to $101.5 billion, down from a 14-month high of $105.9 billion in May. Both exports and imports fell, but imports declined at a faster rate of 2.6%, with pullbacks across consumer and capital goods. Meanwhile, consumer confidence showed some signs of cooling. The Conference Board's index slipped to 90.8 in July, down from an upwardly revised 92.2 in June. Economists had actually expected it to rise, so this tells us that households are feeling a bit more tentative, particularly regarding the labor market. On the housing side, the FHFA monthly house price index inched up 0.3% in May, leaving prices up 2.2% on the year.
Let's talk about the currency markets. With the Fed decision looming, how are the major currency pairs shaping up? I know you've been tracking some key technical levels and moving averages.
Yes, the foreign exchange market is showing some very interesting technical setups. Let's start with the euro. Euro USD closed up 0.20% at 1.1391, attempting to build a base after its recent sell-off. However, the broader trend remains decidedly bearish. The pair is trading well below all its major moving averages. To give you some context, the 50-day simple moving average is sitting at 1.1489, the 100-day is at 1.1568, and the 200-day is up at 1.1631. We have solid support near 1.1353, and as long as it holds there, we could see a short-term recovery or some consolidation.
And what about the British pound? It looked like it paused its recent slide today.
That's right. GBP USD ended virtually flat, up just 0.02% at 1.3291, forming what technical analysts call a doji candle, which signifies indecision. Much like the euro, the pound is stuck below its key moving averages, with the 50-day SMA at 1.3364 and both the 100 and 200-day averages sitting at 1.3397. If it can hold above the recent low of 1.3274, there is room for a corrective bounce.
What about the Australian dollar? I understand we had some comments from the Reserve Bank of Australia today.
We did. AUD USD retreated 0.19% to close at 0.6975. This pullback came after RBA Governor Michelle Bullock noted that another rate hike might still be needed to curb inflation, but she emphasized that the outlook remains highly uncertain. Her comments actually prompted the market to trim the probability of an August rate hike to about 20%. Technically, the Aussie is wedged between its moving averages, trading below its 50-day SMA of 0.7017 and 100-day SMA of 0.7054, but still comfortably above its rising 200-day average of 0.6900.
Before we move on to individual stocks, let's quickly touch on commodities. Precious metals had a rough session today.
They certainly did. Gold suffered a decisive breakdown, closing down 1.37% at $4,024 after hitting a low of $4,012. It is trading well below all its key moving averages. The 50-day is at $4,226, the 100-day is at $4,483, and the 200-day is at $4,482. Former support at $4,083 has now turned into immediate resistance. As for silver, it fell 2.13% to close at $57.12, testing the bottom of its recent range. Silver is also deeply entrenched below its moving averages, with the 50-day at $65.15 and the 200-day at $70.04. It really needs to hold above today's low of $56.65 to avoid a deeper sell-off.
Now let's talk about the corporate world, where we saw some massive news. Apple briefly made history today, didn't they?
They did. Apple briefly touched a historic $5 trillion market capitalization for the very first time on Tuesday, just a day after overtaking Nvidia as the world's most valuable publicly traded company. Apple shares have been on an absolute tear, rising 25% this year. They hit an intraday high of $342.89 before pulling back slightly. And in a very interesting consumer move, Apple also announced a new leasing program in the US. Customers will soon be able to lease an iPhone for up to 2 years, starting at $17.99 a month, though a premium device like the iPhone 17 Pro will run you up to $45.99 a month on a 1-year lease.
That is a fascinating shift in how they are looking to monetize their hardware. Let's look at some of the other major corporate movers of the day. Who else caught your eye?
On the positive side, Iquivia Holdings was a massive winner, closing up over 13% after boosting its full-year revenue forecast to a range of $17.28 billion to $17.48 billion. Boeing also had a good day, gaining about 5% after its second quarter revenue of $24.56 billion narrowly beat Wall Street expectations. On the downside, we saw some steep double-digit drops. Amcor Technology plummeted more than 24% after its third-quarter sales guidance fell short of consensus estimates. Corning also dropped over 12% on weaker-than-expected sales forecasts, and offshore driller Noble Corp closed down over 9% after cutting its full-year EBITDA guidance.
A truly dynamic day across global markets, highlighting just how quickly investor sentiment can shift when earnings season and central bank policy collide. That is all for today's episode. If you found this useful, please follow Market Brief After Hours. We'll see you next time.